Good afternoon. This is the market update for buy sell short for Tuesday, April 22nd. And as you can see from the charts, the world did not end. The bears and the shorts have yet again been sent scrambling to the sidelines, calling the market a scam and blaming the Fed and whatever other excuse they can come up with as the S&P 500 fifth up day in a row, longest streak since September. Pretty meaningful. Now, granted, this has not been the best market to trade over the last week. We've been pretty much sitting on our hands, just waiting for things to turn around, and we finally saw that happen today. And really, when you step back and think about it, it's not that much of a surprise. When you've got everyone and their mom out there calling for a 20% sell-off, that the top is in, that it's time to short, that PEs are bloated, and you see the kind of route that we saw in the biotech stocks over the last couple of weeks, you know, it can be expected that traders are going to be a little bit gun shy and the risk money is going to come off the sidelines. But that should change very, very quickly right now. As you can see, you know, even when the market was selling off over the last week or so, I was remarking about how crazy it was that we were, 200, 300, 400 points from all-time highs, and people were talking like it was the end of the world. You've got everyone and their mom in the business media talking about how the top is in, how PEs are bloated, etc., etc. You've got Einhorn out again today saying how, you know, he's shorting everything, things are overvalued, etc., etc. You know, there's been a lot of, you know, this bull market last 5-6 years. There's a lot of quotation mark gurus out there on the internet right now, traders and gurus that have only traded a bull market. They have absolutely no idea what a real market is like. They have no idea what a real bear market is like. And, you know, when we finally get one, that's when they'll get their comeuppance. But, you know, when the market got as slow as it did over the last couple of weeks and the risk money came off, we had to abide. You know, we stepped to the sidelines. We weren't out there shorting things left and right like you're seeing a lot of other traders do. And, you know, and it's a mistake that a lot of traders make when there's no trades out there, especially in, you know, small cap land or an area that you specialize in. A lot of traders, you know, especially rookie traders or those without a lot of experience, they tend to think, well, you know, the long side's not working, I'm going to start shorting. And then they end up getting bent over the barrel. Best thing to do, which is what we did, we played it perfectly, I believe, was go high cash, sit in your hands and play a couple of trades and wait till the market turns around. And I believe the market has started to turn around nicely for us here. We're within a hair's breadth of all-time highs on the Dow. The Dow Transports, new all-time high today. NASDAQ, which was a big reason why we saw everyone running to the sidelines, positive MACD cross today, downtrend break on stochastics. We had a big bounce in the biotech stocks. You recall a lot of talk about the biotech ETF. Big move on this one today. We had Gilead post really good earnings, positive MACD cross here as well. And all of a sudden, all the shorts that piled in down here are starting to get a little bit worried. And, you know, that's exactly what powers bull markets higher. Bull markets do not fail like overnight when you hit all-time highs, and they do not fail when you've got everyone shouting from the mountaintop saying the top is in. When everyone says that the top is in, it's usually after the market's fallen 20%, just to give you an idea what the last few bear markets have been like. That, you know, we've been trading a long time, since 98, 16 years, seen it all, and, you know, this isn't even close. We have yet to enter the euphoria stage in the market. You know, there's a lot of comparisons with the 99 to 2000 bubble top that we saw in the market. Not even close. Let me just tell you, not even close. And let's leave it at that. 15-minute chart. We got a nice little pullback going into the last 30 minutes of the session. Not really a surprise. You know, the doom and gloomers are out there, the shorts pressing their bets, you know, some chatter going around about the market's down 80% of the time on Wednesdays lately. You know, I could probably come up with a similar stat saying that over the last 5 years the market's up 67% or 70% on Wednesdays. Who cares? They're trying to make the market do what their book is, and they will eventually get squeezed and have to chase higher. Russell, fat bounce on the Russell here. We've got a downtrend break of RSI at 50, positive MACD cross, and you know the last positive MACD cross we saw on the Russell was after a similar sell-off back at the end of July or January going into February, and then look what we did then. We rocketed up over the next 2-3 weeks, so we could be setting up for a similar action as well. A lot of spec money started to come back into biotech stocks today, and that is an excellent sign. You know, we haven't had a lot of swing alerts go out over the last few days. Today, 2 new swing alert plays, and actually let's jump into those right now. AVEO. You know, there's one thing I absolutely love when I trade biotech stocks, and it's I love biotech stocks with mountains of cash, and AVEO is one such biotech stock. Stock sold off with the biotech sell-off over the last couple of weeks, and we've got a nice little bottom here. These guys are sitting on $100 million net cash. Market cap, $70 million. They have an active drug pipeline. Positive MACD cross, and as you can see here, last couple of positive MACD crosses, this stock has gone on a very nice move, and it's also come after the stock has had a pretty decent sized sell-off in the previous couple of weeks. This is one of these more extended sell-offs, and actually if this was December, I'd be drooling. Actually, I'm drooling right now over this chart based on it being a perfect January popper setup. You know, no real news to account for other than market dropping and nice bottoming action. MACD cross, stochastics in the basement, rock and roll time. A break of that 20-day exponential is what's going to set this one free. And the 50-day moving average up there at 168 is calling for a very nice upside. You know, sometimes when you're trading biotech stocks, a couple of things you have to worry about are delisting risks in small cap land and financing. These guys, their market cap is $70 million. They've got $100 million in cash. You essentially could buy all the shares in this company and you would still have $30 million left over without even starting to sell the assets that the company has. Insane. Usually it resolves itself nicely to the upside with a little bit of patience, but we're seeing biotech stocks pop left and right, and this one should do very, very nicely in the near term. IMRS, another sweet setup here. Similar situation, down with the biotech sell-off over the last couple of weeks. Positive MACD cross. Stochastics in the basement. Nice bottoming action over the last 3 days. We got that nice little spike up to the 20-day exponential. A little bit of a pause back. The next secondary push through 150, and we should see that move up to the 164 to 180 range. And even then, based on how this stock acted previously, very, very cheap. And you can see, again, last time this one had a positive MACD cross, 180 to 280 within a week. What's that? Dollar gain, 60-70% in a week. The last time we had a similar chart setup, looking really, really good. PTN. This is our swing biotech play, and not a lot of stocks I will ride all the way up and all the way down, but that's exactly what we did on PTN. Last week, this stock was at $1, and you'll call me saying, you know, we're at the uptrend line, we're waiting for the news, we've got an extreme negative MACD, stochastics are oversold, and today the stock was at 132, 30% move in 4 days. Just a matter of trusting in your due diligence when you're swinging plays, but when the market is not cooperating. You either go all cash or you go high cash and sit on the stocks that you really, really like. Hopefully we're going to get that partnership news within the next few days and get our double out of this play. Mad Cats. Now, Mad Cats, we picked up some shares this morning on this little bit of a dip. You know, had fallen off with the market, but we're starting to see the speculative money come back in, and the Amazon Fire TV is selling like hotcakes. Mad Cats is the controller for that. We also have the Apple controller news coming out any day. Like I said last week, with that news with Amazon and Apple, over the last 2 weeks, in a normal market where we would see speculative money coming in, the stock would be at 80 cents. So now that the market looks to be getting back to normal, we could see that's quickly reflected in Mad Cat's stock price. VTUS, again, another sweet little biotech setup here. It's just been stuck in bullish falling wedge over the last 3 months. It's right there at the breakout level. 122, the 20-day exponential is what would set it free for a move to $1.50. So very nice setup. Again, another slow-moving biotech stock. We've seen this happen over the last couple of days. You got a lot of traders really sketched out about getting into plays, and as they do that, they're just watching one by one as these stocks slowly tick ever higher. Really soon, and I think within the next day, although we saw some of it happening today, you're just going to see a mad rush into these small cap stocks. And the action we saw in biotech stocks today, it makes me very enthusiastic about the near term. I want to make a quick mention on DEJ. Fat little pop for this one for us last week on the conference on Thursday. Lots of great news on it, but a sell the news reaction, not uncommon in small cap land. And, you know, given all the volume and back and forth we've seen over the last month, a little bit of consolidation is to be expected. We're waiting for the partnership news that the company hinted at in the conference call. So it would be great to see this stock tread water here in the 22-21 cent range for a few days before it coils for a move higher in the near term. Now, biotech stocks are our focus right now. It looks like speculative money is starting to get a little bit of greed. The fear is moving out of traders' brains right now and starting to be taken over by a little bit of greed. That's a great sign. We had a couple of new swing email alerts today. Another great sign. So things are looking good going into the next couple of days. Any questions, shoot me an email, feedback, buysellshort.com. Have an awesome evening and see you all in the chat room tomorrow. Bye.